Hi, I'm Scott Schubert, and today I'm going to show you why most people using price action trading strategies are not able to see if the market's going to turn or keep going. And it has to do with the way that you set up your charts and what it is that you're looking at and focusing on. So let's get started with that right now. Okay, so if this is your first time here, be sure to subscribe below and click on the bell icon to make sure that you're updated on all new videos. Okay, so have you seen a lot of people who are using strategies that are called price action trading, which I do have a lot of respect for because it is based on price action itself, which is what I base all of my trading on. And what I've noticed is that a lot of people who use these methods will have their charts set up sort of like this, so that what you're seeing are great big boxes. So these rectangle things, known as Japanese candlesticks, are just big boxes. And so that would show you, well, you know, here's a doji and here's the next candle, and we're waiting to see what happens with that candle. But that is not enough to be able to read price action. So price action is not just what direction is the price currently going at this very moment. You know, is going up or is going down? You know, so that's just kind of a reactionary way of trading. Like, oh, the market's going up right now, so I better go long. And we should probably all know by now that that type of reactionary trading in itself will never work in trading. When you see, oh, the market is going up in this moment, so I should go long, there's something more that you would need to see. And unfortunately, you're not able to see that with a chart that is set up like this. So the first thing you want to do is, on this chart, I'm just going to, you could click on zoom out. You can click on zoom in to get it to look like this, but then you want to click on zoom out. This is some charts will just enable you to easily scale in and out until you get to the point where the other thing, I have seen people with charts that look like this, which is also equally unusable, because this would be the same as going to the next longer time frame. Like, this is the weekly, and so this would be the same as if I went to, I mean, this is the daily, but if I go to the weekly and zoom to the place where it looks normal with candles, that would be the same as viewing it from the daily, zoomed way out where you can't see candles. So if you can't see any candles, that's not going to be very useful. I mean, you can still read the charts without seeing the candles individually, but to me, I think it's just a little bit more useful to be on a scale where you can see individual candles, but you're not just seeing big boxes and not able to see the pattern that is formed by the highs and lows. Because here, this is very, very important that you can read this series of highs and lows. And in fact, that's how we were able to identify the long entry on gold at the very moment that it formed, on the day that it formed, is by seeing this series of, I mean, maybe you don't know that, but if you go out longer, you can see this is a perfectly shaped uptrend, and then there's a B, 1, 2, 3, 4, 5. That, you know, that was just so obvious that this point was the place to go long. But if you can't see that on your charts, well, I guess you wouldn't be able to know that. So the things that I'm able to see, which is I can tell if the market is going to turn, like on a chart like this, on the very day that it's turning, and on time frame shorter, at the very moment that it's turning. Like on the 1 hour time frame, I can tell if the market is turning at the very moment that it's starting to turn. And in order to do that, I have had to be able to learn to read charts. And people who think that you can't read charts, well, that's great. I mean, I love it when people say that they don't believe that it's possible to do this or to read charts, because for them, they can't. But for people who can read charts, the way that you would do it would be based on reading these highs and lows and the pattern that is forming. So that's the first step. If you can't see these highs and lows and the pattern that they're forming, and you can't see the candlesticks, or you can only see nothing but one big candlestick on your chart, well, those things would stop you. You can't see what it is you need to see. And it's so important that when you are trading markets, you should be able to see what it is that would communicate to your brain that something is going to turn. And there are ways you can tell this. And in many cases, it just seems like it's so obvious. And to many of the people in our community, they agree, oh yeah, that's totally obvious. I saw that coming a mile away, like we all did, and we had it planned way in advance. And then when it's happening, we can see it. Other people, if their charts are not set up this way, not necessarily this way, but if their charts are not set up where they can see it, then they won't be able to see it. And if they don't know how to see it, they might not be able to see it also. So another thing that's kind of interesting is that some people might believe that if I added an indicator below this price channel, then I can't trade based on price action. Okay. Anyway, now that I have an indicator below this channel, is there any part of the price action that I can't see? No. So I can still see every part of the price action. So my focus is on the price action. I'm not trading based on an indicator. And the reason that people do this is because they have been taught that someone said, indicators don't do anything. They're just lagging. And that's true to a certain extent. So that's definitely, there's no indicator that's going to become the holy grail of trading that you just go long every time it goes up or whatever. Yes, that's true, but that doesn't mean that indicators can't also be used. So can indicators be used for price action trading? Yes. Maybe they can't for you, or maybe for some people they can't, but for me they can, because I'm able to see the price action and have an indicator below here. And there are many indicators that you might want to use that might just assist you. The only purpose is to kind of assist the visual process of recognizing if there's a trend. The purpose of the indicator would be to see if there's a trend, which you can already see, and if there's an end of a trend. And if it can help you to see the end of a trend, just even slightly, then that's useful. Could that increase the number of trades that you win? Yes. Maybe it can't for some people, but make sure that you don't assume that it can't for everyone, because for some people, it can increase the number of trades that you would win. And you cannot truthfully and scientifically say that indicators are only lagging and useless, because in many ways, some indicators have amazing ability to predict the future and show leading qualities of what's going to happen. And in fact, divergence is one of the things that is used to predict what price is about to do. I can tell every time when there's a trend if the trend is ending or if it's not ending. I can just look at it and say, this trend is ending or this trend is not ending. And when you think about how valuable that is in trading, man, is there anything that could be more valuable than that? That people are able to do this. And when I show in many of our live videos, which many have been posted here, where I showed exactly, this is now turning, I just entered, boom, and then wait and see what it does. Some people who didn't believe that it was possible to identify turning points soon had to confess and realize that it is possible for this person to do it, and for other people in our community who have been showing this for a long time, apparently it is possible. So having an open mind and realizing the truth of things is one of the things that will help you to grow and develop as a trader. And one of the things that I have been emphasizing is that when you see that the market forms a trend, like, did the market form this trend here? Or did it not? Did it form? Oh, okay, yeah, it did. And it did for everyone. On all charts, all over the world, the market did form this trend. And then did it form this correction? Yes, it absolutely did do that. So then, once you see that, you would, for most people who have like just a little bit of common sense, would just come to a realization. That the realization would be, that's true. The market did form this trend. The market did form this correction. That's not anyone's opinion. It really did that. It really did that. So once you realize that that's true, once you realize that you can identify the end of a trend, some people still do not know that you can identify the end of a trend, and that's great. Some people do not know that you can identify the end of a correction, and that's great too, because I did spend quite a bit of time perfecting that. And although I don't really think that it's any real superhuman thing, I think that anybody should be able to identify the end of a correction. Same way that I do it. It's not really a super kind of rocket science. Anyone can identify the end of a correction with a little bit of training and practice. Once you realize that that's true, then it should become clear to you that there probably wouldn't be any way that you could make more money if you could identify the end of a trend, if markets do form trends, and you could identify the place where it ended a trend. And then they form corrections, and you could identify the place where it formed an end of a correction. A lot of professional traders never have known that you could identify the end of a trend or the end of a correction. And that's fine. Now that some of us do know that you can do that, it could be a big breakthrough for some people. So what's one of the next things that would help you to be able to see these things on your chart? Like, as I just barely adjusted my chart slightly, and I'm able to see this, and you're able to see it. If you're not blind, you are able to see this trend right here. You are able to see this correction right here. And just from the fact that these waves are a different pattern that is overlapping, that only went a percentage of this move up, that should be enough to tell you that that's true. Markets do form trends, and then they do form corrections to trends where they only go in the opposite direction a percentage of the amount that they went in the first direction. And that is true. Once you see that, then you have stumbled onto something that you could use for the rest of your life. Oh, that's something that's true about financial markets. Now, how could I use that to make money? Oh, if you could identify the end of a trend, if you could identify the end of a correction, some people get that immediately, and some people spend the whole rest of their life, they still don't get it. I could keep saying it and keep showing it, and they still don't get it. So do you get that? That if the market formed a trend and you could identify the end of a trend, and if it formed a correction and you could identify the end of a correction, do you think that there would be some way that you could make more money than that? Think about it. Think about it as hard as you can. Would there be a way? Maybe, but in general, if you could see those things and those things are true, then that would pretty much give you everything you would need to know to make the maximum amount of profit that would be possible to make. And if you could increase your probability really high, and all of your winning trades were bigger than your losing trades, and maybe you're still going to have some losing trades, but they're going to be not as many and not as much. So another thing is that adjusting the frequency. What is the frequency? It's how many units are displayed. How much time is in each unit. Like on this chart, there are units of candles that are displaying 1 day of time for a period of time. And then if I adjust that frequency, something amazing will happen that you will start to be able to also use in your trading. And what it has to do with is your ability to see what the market made. This is not someone's opinion about how you should trade, or this is not someone's opinion about an analysis of the market. It's, can you see what the market made, what the market did? Because that's what everything is based on. It's based on you being able to see what the market made. And some amazing things have happened over the years as I have learned to adjust the frequency continually. Reading the market from the top down, from the longer time frames to the shorter time frames. And it doesn't matter who you think you are. If you think that you're a 5-minute time frame trader, if you think that you're a scalper, if you think you're a 1-minute time frame trader, or whatever it is, you will get much better results if you can see what the market is doing and if you can read it on all time frames. If you're trading the 1-minute time frame and you haven't read what the market is doing on the weekly, the daily, and down into the 4-hour range and into the 1-hour range, if you're trading on the 5-minute and you do not know that, it is not possible that you could get as good of a result. That is my opinion. That is my experience. It is not possible that you could get as good of a result as you would get if you did read the market on all time frames. And all you have to do is click on these little icons, whatever they might be on your chart, on the periodicity time bar. All you got to do is click on it, and what I have found is that you can look at all time frames in less than 5 minutes. It doesn't take 5 minutes to look at all time frames, does it? No. So how long does it take? Let me go to a different chart where I'm used to looking at something like this. So this is a MetaTrader 5 chart, which has these extra time frames in there. And I'm looking at the weekly. Let's say, how long does this take? You got a stopwatch. Now I'm looking at the daily. I totally see that. I'm looking at the 12-hour. I totally see that. I'm looking at the 8-hour. I have totally read that and I understand it. I'm looking at the 6-hour and this is clear to me. I'm now looking at the 4-hour and I can see all of that. Now I'm looking at the 3-hour. Now I'm looking at the 2-hour. Now I'm looking at the 1-hour. Now I know how to trade the 1-hour. Now I'm looking at the 30-minute. Now I'm looking at the 20-minute. And now I'm looking at the 15-minute, although it hasn't popped up yet. Here it comes. There it is. Now I'm looking at the 15-minute. Now I've seen everything that I could possibly need to see to know how to trade any time frame. If there were any entries on any time frame, I've seen it. And how long did that take? Because some people would think, oh, that takes too long. Too long compared to what? Compared to what? It's not too long. And if you have an intention of having good results in trading, do you think it's too much effort to look at those time frames? A person would have to be extremely lazy to think that that would be too much effort to look at those time frames for 1 minute. It's a practice you may want to get used to and discipline yourself to always do it, because even if you ever open your charts and say, oh yeah, I already know what's on the weekly, and you just go to a shorter time. Let's just go down here and get started, and you skip it. Believe me, and trust the fact that there will come a time when you will go, oh my God, I forgot to look at the weekly, and because of that, I totally messed up this trade. Well, you could have put in that extra 1 minute and looked at all time frames. Now that you can starting to get an idea how you can adjust your charts and see what the price action is showing and telling you in its own language, that this is all about nothing but price action. Price action is also displayed in this indicator as well to give you an additional visual confirmation. You know, it may be lagging or whatever, but if it helps you to see when the market is turning or if it's not turning, as it does me, I can tell if the market is turning or not turning. And part of it is because of reading this indicator. I've just learned to do it. Now I can read this indicator. I can tell if it's turning or not turning. And it's accurate. I can test it, and every single day I can tell if it's turning or not turning. Because of that, it's very valuable. So if someone says, oh, you can't have any indicators just lagging, blah, blah, you know, that's okay for them. For them, they can't use it because they don't have the ability. But for people who have the ability, they can gain more probability and higher winning results. So I hope that this may help you to some extent to become a better trader, and maybe it would inspire you to practice this and use it in your trading. If you want to know more about what actually works in trading, just click the link below or go to tradingmastermind.com. And I look forward to seeing you in the next video. And remember that once you gain knowledge about the market, you can't ignore it anymore. So from that point on, you will choose to trade deliberately and live your life deliberately as well.